Good morning, good evening, good afternoon, wherever you may be. This is Sid from Elliott Wave Plus, and this is the April 7 of 2020 edition of my quarterly premium plan webinar, where I go over all of my aspects of the premium plan, the algorithmic trading signals, how we get those out to you, and just kind of go over the spreadsheet that we send out, the actual document every evening to you, and how to interpret the trade signals, set stops, and take these trades, or possibly not take the trades. And that beats one of the things we talk about, because one of the other things I do, and the premium plan members all get this information from me, is I predict movements in the markets based on a combination of Elliott Wave analysis and Hurst Cycle analysis, associated Fibonacci price targets, divergences, overbought, oversold, conditions in the sentiment, and basically all the different things that I talk about every week in the weekly counts webinar, that also I think should be taken into consideration before taking each and every one of the automated algorithmic trade signals. Before we get started, let me bring over my disclaimer. It's at my website, elliottwaveplus.com. Scroll all the way to the bottom. Click on the Terms of Service Disclaimer tab, and there's my disclaimer. It's there all the time. If I were to summarize it in one sentence, it would be, there's risk of loss in all trading. And also, it might be worth mentioning, especially in the webinar where I'm going over a lot of the automated trade signals, is that past results is no guarantee of future results. So I'm going to turn off the video of self here. And I'll turn it back on at the end. And just as a reminder, go over a few things that premium plan members enjoy. So premium plan members, they get everything that the crypto plan people get, that the basic plan people get, and the pro plan people get. But in addition, they get nightly automated signals based on a proprietary momentum algo I created. And I'll describe that shortly. So the folks in the crypto plan get my Elliott Wave and Hurst analysis of Bitcoin. Plus they get to see on a nightly basis automated trade signals on a number of cryptos: Ethereum, Litecoin, Ripple, Bitcoin, and I'm using essentially the same proprietary momentum algo for crypto plan people that I am for all of the other items that premium plan members get. For instance, on the ES contract on the S&P, gold, silver, crude oil, bonds, the ZN contract, and so on and so forth, and as well as a number of ETFs, including some leveraged 3 times bullish and 3 times bearish ETFs there as well. So, and I must say, when I go back over the trade signals that have been going out for crypto plan members for a long time. These continue to put up profits month in and month out. Now, every quarter, we go through and we re-optimize all of the algo set, all of the settings that create the buy signals and the sell signals. We re-optimize to the last 3 running years. So let's just take one of these here. Let's take Bitcoin. And the reason Bitcoin is particularly interesting, let me see here. Yeah, is because it continues to be a leader in how much profit it brings in, going both long and short. This is on the futures, the CME futures contract on Bitcoin. And this is really the only way in the U.S. you can go both long and short on Bitcoin. But this continues to be one of the leaders in how much profit it brings in over time. And, you know, we've been doing this, I looked back, we've been doing this, sending out these signals for quite some number of quarters now. And so these are signals that have been going out to subscribers for a long time. This isn't just pretend or, you know, based on strictly on back testing. A lot of these signals have been going out, but on the Bitcoin, what we do and what we did on all of the items that we send out signals on is we go in to edit the strategy and we set the last backtest period from March 31 of 2017 to March 31 of 2020. So that is the last 3 running years through the end of last month. And the interesting thing about that particular 3-year period is, and let me go to the S&P, the ES contract to talk about this. But over the last 3 years, we've seen a lot of different kind of markets, which is good because the algo isn't set only to just a kind of a one-way bull market anymore. That's the way a lot of the settings were back before we've had some of these pretty serious corrections. So going back 3 years from March, this is a weekly chart of Dow Jones Industrial Average. We go back 1 year, 2 year, 3 years. So it starts about right here. So here's the price action, at least in the stock market, we've seen over the last 3 years. We saw a one-way bull market. We saw a crash, a kind of a flash crash in the first quarter of 2018, and then an upward grind, choppy corrective grind, and then another crash down into Christmas of 2018. And then we had kind of a one-way market, and then we had about a 5-month long choppy triangle, and then a thrust out of the triangle, and now we've had another much larger crash. So that is a lot of different kinds of price action that is all included now in the back test period. And so I feel pretty good about the settings that have come out as a result of this, and we really needed this down move in order for the algo to on balance be set to possibly, you know, take advantage of shorting opportunities just as much as it might on going along. And so I believe that we have that now, and what the back test basically has done, because in a down market in the stock market, we have a spike in the VIX, the volatility. Some of these days that we've seen were 1,000+ days. I mean, as a matter of fact, we had a whole bunch of them in late February, going all the way down through late March. Now things seem to have calmed down just a little bit here, but watch out for that, because we could easily break right into another strong trend. So we haven't seen volatility like this really since '08. Not like we've seen just in a very short number of weeks here. We just haven't really seen a volatility move to the upside and stay to the upside for that long, I don't think, really since the worst part of the crash back in '08. And now we have this sideways business. And so, is it a bull flag or is it a bear flag? Well, the momentum algo, as you can see under current settings, was able to profit from in two humongous trades on the downside. The last really big one was a $14,000 winner based on current settings. Now, admittedly, it had to see this price action in order to get the settings right. But now what this basically has done is it has it looking for using a larger stop when shorting. Before, there just weren't enough shorting opportunities for it to really even care. But now that we have this move to the downside, you can see on the Dow Jones Industrial Average, the algo and the YM contract, it's using an $1,100 stop. So it trades one contract at a time, one YM contract, $1,100 stop for when going long, and a $1,500 stop when going short, and that allowed it to stay in the trade even though there were these big rips to the upside after getting a momentum trade signal. That gave it the larger stop, given enough room to stick with those short trades. And now that we're in a sideways period, this often in a sideways period, a momentum algo will get stopped out several times before it gets into the next trend. And this is the value of using, of examining these signals in conjunction with my Elliott Wave and Hurst Cycle analysis work. Many, I think, would have been very surprised last weekend on Sunday. I was bullish the stock market. Now, many Elliotticians were going, no, this move to the upside is already over. But because of Hurst, it was calling for a move up into an 80-day cycle peak on the Dow Jones Industrial Average, peaking approximately tomorrow. Well, it looks like it peaked today. And so that looks like a finished ABC pattern in the Dow. And now we could start getting into some stronger moves, at least on the analysis on the Dow Jones Industrial Average. We could start getting some stronger moves to the downside. And therefore, on the weekend, going into the weekend, there was a buy signal on Friday on a lot of these momentum algos. And I stated in the webinar, I don't think it's a good idea to take the buy signals. And that buy signal in most items was stopped out. And so the question is, what is the preferred direction to be looking for, to take one of these momentum signals? And I still believe, based on combining Hurst and Elliott Wave, that looking for the signals to the downside is the proper thing to do right now. And therefore, if you'll notice, there was a buy signal at the end of the day today on the Dow Jones Industrial Average. But you can see the price went way up today and then closed actually negative on the daily candle on the YM contract, that is not a very bullish looking candle. As a matter of fact, that is looking on a daily candle looks like a reversal candle. So this is the point of this, is that these algos, if you took every last signal, you probably do very well. But I think it can be, there are situations where you can ignore signals and wait for a more opportune moment. For instance, down at the bottom of this wave 3 black, that on the Dow Jones Industrial Average, in my webinars back there on like March 22, I was thinking the bottom was very close to being in, and we were going to get a fourth wave. Well, in the fourth waves, you get a lot of chop. It's corrective, and at that early juncture, there was no way to know for sure if what pattern we were going to get in the fourth wave, whether it was going to be a zigzag, a triangle, or a flat, and I had notated that on my charts. All we really knew going into this fourth wave, if this is a fourth wave, was that wave 2 was very brief, and it was likely that wave 4 would therefore last longer in order to fulfill the guideline of alternation in Elliott Wave. So this gave another buy signal at the end of the day today on the Dow, and I still don't think it's a good idea to take that. I think it's better off looking for, if you want to wait for these momentum signals, look for a sell signal here. And that is how I combine the two methodologies. Let's look at the ES contract. ES contract, here we go. So once again, it's a very similar looking pattern on the ES contract, but we can see that it didn't produce an actual buy signal today, but it is flat. The last signal that it got was a sell signal. Actually, this is over the weekend. We were on sell signals on the Thursday or Friday leading into the weekend. This last week, we were seeing sell signals on the algo, and I was saying, no, don't take that either, because Hurst thinks this has another leg to the upside to finish an ABC. And so anyone who would have taken that short signal right there, despite what I said, would have been stopped out the very next day on Monday, which was a huge up day. So I think you can combine the work of these things, and I do think that it's important to keep in mind what the algo, momentum algos are attempting to do. It's just one more piece of knowledge that a good trader ought to have, is what are the momentum algos probably doing. Another thing that's very, very valuable to know, and it's something we provide for premium plan subscribers, is current sentiment conditions. Now, admittedly, the positioning of commercials is a lot more important in commodities than it is in the stock market. So I'll probably talk about that when we show one of those later. But I mentioned some of you probably very curious as to what I think is happening in the stock market right this second. And so here's a 240-minute chart of the ES contract. And there's a couple ways this could go here. I do want to show you, I'll bring over a Hurst Cycle analysis of the S&P. And you'll notice it thinks this thing isn't ready to quite break down yet. It basically, but I find it a little suspect that it is still thinking that it has a little bit more upside to it. And here's the reason why. You see this nest right up here? That is that's centered on April 12th. So yeah, there's a few more days in order to get in the center of this 80-day cycle peak. nest. But notice where it put this last 40-day cycle peak, or where it was due. It's not in a common sense location. Now, it does think that this was a 20-week cycle trough down here. And so normally there would be a few weeks of upward movement out of a 20-week cycle trough, and that occurred on March 23. So, we're about a little over 2 weeks past that. We're about 2.5 weeks past that. But there's a lot of downward pressure in the markets right now because I think that peak in February was a 4.5-year cycle peak. And so each peak that we see, like this 80-day cycle peak, we're probably going to see the top earlier than when Hurst would look for it. So this has been my roadmap on the ES contract. 1, 2, 3, 4, 5 for A. Pointed out, and I pointed out some time ago now that we had seen a 5-wave up structure, and so we were therefore likely to get a zigzag to the upside here. And then an A, B, C flat, and there's a 1 and a 2, and many of you may recall that on Thursday of last week, right here, I sent out an email to subscribers that said that whatever low we got on April 3rd, on Friday, was probably going to be the lowest low for at least several more days, possibly even another 10 days after that. And that turned out to be a wave 2, wave 3 to the upside. So here's the only question left. And it's a pretty good question. Is this done with a 1, 2, 3, 4, 5, and that's it? I would say there's a pretty good chance that that's correct, and that's why I've switched around my main and alternate here. And the reason is because wave C blue stopped going up almost exactly where it was 0.618 times the length of wave A blue. And the next Fibonacci target would be way up here at 2938, where wave C blue would equal wave A blue. And I'll just have to say, based on the size of this divergence that is setting up on the ES contract and the fairly aggressive movement down today, which, by the way, does not count as a clean 5, completed 5 yet. But despite the fact that I can't see a real clean 5 down here yet, I'm because of the Fibonacci target being hit, I labeled that wave 4, and I think we're going to get a 1 and a 2, and it's on down. And yes, that 80-day cycle peak, as I just showed you, is still sitting over here, but I don't think it's going to be able to stay up over there to over there. And so I think there's a decent chance we finished an ABC zigzag now, and we're going to get a 1 and a 2 for the next, day or two before it breaks strongly lower. That has become my main count. And the alternate is that this was pink 1, this is pink 2, this was pink 3. Now we're in pink 4, and we'll get a pink 5 up over here. So many of you might have tuned in to see what my latest Elliott Wave and Hurst analysis was on that. So what does that have to do with the signals? Well, getting back to the topic is we've been in this choppiness, and it looks like a potentially complete corrective ABC pattern, and now it's starting to look tired on the MACD on a 240 minutes. And, if you look way in, let's look at a 10-minute chart. From the top tick, that looks like a clean 5, 1, 2, and then 1, 2, 3, 4, 5, 1. Maybe get a little flat here for 2. So 1, 2, 1, 2. Yeah, this easily, and even though this doesn't count as a clean, clear 5-wave structure to the downside? 1, 2, 3, 4. No, that overlapped. That doesn't mean it can't be a very bearish 1, 2, 1, and then, I mean, it's possible wave 2 is over there, but a 2 over here. So that's just a quick update, and so I just don't think it's a real good idea to take any long signals right now. And even if this thing was able to rebound a bit higher, I still don't think it's a good idea to try to capture anything, any profits to the upside here. And the reason is because once this 80-day cycle peak is finished, we've got a downward trajectory down into, the composite line is suggesting August here now, early August, and a very large cycle trough due, and that would be very much on the early side, in my opinion. I think more like possibly down into mid-September might be a better idea for this large cycle nest down here that is due. So we just topped in a large cycle peak, and I think we're moving down into a large cycle nest, and I don't think we're down. We've got through moving down into that very large cycle trough yet. So notice that the back testing has got that it's set where it would have been able to make a profit now a couple of times on this big down move that we saw from mid-February down through late March now on both the down the S&P. So the algo is now primed to be able to maybe pick up some profits on the downside that it wasn't really that ready to do after a very long period of upward grinding price action. So it's really good that it's gotten to take a look at this. Another possibility is that trough, since that very large cycle trough isn't due until August, September, this could be a 1 and a 2, and we could get a very aggressive 3, 4, 5 down here. So my preference is to be bearish here. Another thing you'll receive access to after this webinar is a copy of the video, so you can go back over it, and you'll also receive the quarterly Excel file. So what we do every quarter is we take the fresh back test that we have on all the items, and we put it into a sortable Excel sheet, and we get it to you in Excel format so you can play with it and sort it all you want. And so, for instance, if you just, what all of these items do, if it's a futures contract, the algo trades one contract at a time, period. If it's a ETF, when it enters into a position, it's the math that we're using here assumes that you buy $10,000 worth of shares. Now, obviously, if you have a smaller account, you can buy a smaller amount than that, a number of shares. And if you have a larger account, you can buy more. And so this is a list ranked by net profit brought in over the 3 years based on it had the current settings been in place over the last 3 years. And you can see Bitcoin is almost always up there really high. That isn't because it's necessarily better at trading Bitcoin. That's because one contract on Bitcoin is worth more than one contract on a lot of these items. So don't be too fooled by that. And then the German DAX is usually up high because one contract on the German DAX is worth quite quite a bit more than one contract on other tradable items on this list. So there it is listed by net profit, but let me just show you a couple of ways that you could look at this thing. One is to sort by winning percentage. So there's the top winning percentage items, and you'll notice that the ES contract on the S&P has a winning percentage of 54%. And I know that I say this every time, but on these algos, the way I've written the algo, it isn't to win with the highest percentage. The only way to get an algo to win at very high percentages is to use a large stop and a very small take profit. That is a poor risk to reward ratio. And when you have a very small fixed take profit, you are limiting the profits you can make in a trending move. And so the way I designed this algo was to be able to put up the most possible profit dollars, not the highest winning percentage. And so very often the winning percentage on almost all these algos that I have, and no matter how I back test them and how I set them, the winning percentage a lot of times comes in about a 50-50 proposition. So about 50% of the trades are winners and 50% are losers. And what the momentum algo is doing, it is assuming that every trade might turn into a trending trade. And so it has an open profit objective. So when it got short right here, it gave a signal, short signal on February 24, and it suggests getting short at the open on the next candle, on the February 25 candle. And then it has an open profit objective, and it doesn't exit that trade until this green block right here. And the reason to exit that is that's where the Walter Bresser crosses back up over its moving average. And the same thing happened over here. Is it got a sell signal here, got short here, and it stayed in the trade until the Walter Bresser crossed over. Well, given the huge moves that were happening over those days, I mean, that was a $12,000 winner. And this was a, about a $13,000 winner, much larger than the winners or losers that were happening during what seemed like a really aggressive move at the time up into that February high. But even when you look at the move up into the February high, you can see there were some losers in there. Right here and right here, there was two in a row, but the winners were substantially larger than the losers, and that is how the algo makes it all work. Greg says, so the recent optimization changes only affect future trades. Correct. It only affects future trading signals. Future trading signals. Remember, we're optimizing to prior price action. And that's why I made the point of I'm really glad that we got this aggressive move to the downside so that the algo could see that and consider it in its settings moving forward, because I don't think we're done with this bear market. And so I think, but the recommended stop settings were not, they were too small for the kind of volatility. The explosion of volatility was on the downside here. But if, let's say this is a wave 1 and this is a wave 2, which is another way to count it, and we get into a wave 3 down, the volatility might explode again. And the algo is, the settings that we have on the algo right now are much better equipped for that sort of environment now than they were prior to being able to incorporate that to examine that price action and include it in its back-tested period. But yeah, for a history of what this, how the settings were doing prior, this chart is no longer going to be accurate. In order to look back and see if the algo was able to trade profitably during this move to the upside, and I can tell you it was, you would have to go back to earlier versions of the spreadsheet and the webinars and earlier versions of the nightly reports, and look and build the history that way. So once the settings are re-optimized, it optimizes them going all the way back. So we have the spreadsheet. Let's see here. And so you might consider winning percent if you like the idea of a winning percentage better than 50%. You can consider that. Another one would that would be worthy of consideration would be the number of consecutive losses during the back test. And you'll notice that, and this often occurs, that the U.S. dollar index, the most number of losses it's had to endure in a row during the past three years is only 4. And in the case of the Russell 3 times bullish TNA, 4 is the most losers, and at one point it had 7 winners in a row. And so the idea here is maybe to get, if you were going to choose an item to trade, something that with current algo settings you wouldn't have had to experience, for instance, 10 losing trades in a row like you would trying to trade the VIX, like the algo did there, so on and so forth. And so you can, and then maximum dollar drawdown on the account. You'll notice that, or the size of account, account size required. If you have a smaller account, let's say you have an account the size, you want to trade the futures market, but your account size is less than $10,000. In this environment, I would be looking right at these top items on the account size required, with a very small account size required, and this would be the new micro E-minis. M2K, MYM, MNQ, and MES. And you notice there are some full-size contracts that still can be traded with $5,000, $6,000, $7,000 accounts, like the ZN contract on bonds, the G6A contract on the Aussie dollar, the US dollar index, the Canadian dollar. So would the micro E-minis, the new micro E-minis, and a lot of the currencies can be traded in the futures market with smaller accounts, but you just have to know where to go on which contract. And this sortable spreadsheet would help you with that. So every night you get a hang on a second, log in here. Log into the site like I'm a subscriber. Okay, I'm in there. And then I'm going to go back here. And we're going to look at nightly reports, premium plan, nightly algo reports. So you get an email, and the email will say, okay, the nightly reports have been posted. And when you click on that email, it sends you to this page. And so here's tonight's nightly algo report. You go to view it, and there's all the screenshots you get every night as a premium plan subscriber. There's about 20 tradable items there. If it's a futures contract, you can go long or short, either one on it. If it's an ETF, like EDC and EDZ, that's a new one. That's the 3 times bullish emerging markets ETF and a 3 times bearish emerging markets ETF. You'll notice that we just added these, and the reason is because I think we might be coming into a major low on the Chinese markets and the emerging markets. And so I wanted to add these as a potential item for you to consider on looking on for signals. Another item that I think is going to become very interesting fairly soon is the 3 times bullish large cap energy stocks ETF, ERX, and its companion 3 times bearish ERY. The beautiful thing about the algo when we are running with 3 times bullish and 3 times bearish ETFs is it has different settings on the bearish one than it does on the bullish one. That it conforms to the way that thing acts, and therefore it takes into consideration the size of stop that's necessary when essentially shorting, as opposed to going long. And so that is all built into the system as well. And then there's the all-important nightly report, where you can very quickly look at the color codes. On green means buy signal, yellow means either exit or change the stop to trailing, and so on gold it was stopped out. Canadian dollar got a new buy signal, so on and so forth. And then a couple of an exit trade signal on the euro. It was on a sell signal, and it says exit it, and it exited that trade in profit, and now it's flat. So the also included on nightly report is a synopsis, so that I work every weekend. I don't update these during the week, but it's the current Elliott Wave count and Hurst Cycle expectation moving forward. That could give you a quick idea of whether or not you want to take a buy signal or not. Like on the Dow Jones Industrial Average, I already said probably not right here. And it also gives some quick information on sentiment. For instance, the DSI, the Daily Sentiment Index, it closed at a 27 tonight on the ES contract there, that is. On the NASDAQ, it was 32, so on and so forth. So it's a lot of information there to glean. So expect to get a downloadable link for this spreadsheet, and I will send you a recording of this webinar. And now I'm going to open up to questions. And one question I'm going to go ahead and anticipate is what do I think is going on right now from an Elliott Wave and Hurst standpoint on gold miners, as well as gold, silver, and oil. And so I'm going to flash through those. But anybody that has any questions at all on any topic, throw them in the chat, and I'll try to address them here pretty quick for you while I run a few things through here. So my count on GDX has been working pretty well of a possible leading diagonal. But that would mean that tomorrow it would need to go ahead and finish the move to the upside. All it really needs to do is move up above on a leading contracting diagonal. It cannot truncate, so it would have to move up above 27.21 if this wave count is correct. Frankly, you know, it's showing a loss of momentum there, and so am being a very conservative trader myself, I decided to exit today on a lot of my mining positions, and then I want to look at buying back after a dip. And I think that this dip could be a pretty substantial dip. And that would, and so remember, on a leading diagonal, you could get a deep wave too. So we might get another plunge here. And I've been warning of this in the webinars that I've only drawn it back to the wave 4 of 1 lesser degree, but it could be deeper than that. There's no change on Hurst. No change on Hurst. And one of the reasons I decided to exit my personal long position, I don't have any long positions now on in the precious metals mining section. Full disclosure, I do have a first tranche position short the S&P, and I'm willing to add on if the alternate works out, where it has one more push higher. I'm willing to add on to that short position. It's not a full position. That's the only thing I'm holding right now. But as far as the mining goes, here is I'm going to go to gold and silver. And here is the actual reason, even though I didn't get quite high enough to call that a fifth wave on the GDX, there's a couple things. Let me show you on Barrick. So on Barrick gold, it did move high enough to complete a leading contracting diagonal. So 1, 2, 3, 4, 5. So it did complete a potential leading contracting diagonal, and that's a very important large cap stock. Okay, so so that is one of the reasons that I decided to exit and wait for this dip. And then the other reason was on gold and silver itself, both of them hit my upper target. There's no such thing as a truncation in a leading contracting diagonal. If GDX can't make a new high above that slightly earlier high a few days ago, then it's going to the count would have to be something else other than leading diagonal. But there is no change on Hurst. But you can see that gold, I had this target up here on gold, and it went up there, and I think that it completed a 5-wave structure. 1, 2, 3, 4, 5. So there's the target, and it's slightly overshot it, and now it's pulling back pretty good. Here's another thing I'm worried about on the gold and silver miners, and I mentioned this in a webinar this last weekend, is there's a lot of mine closures because of COVID. And so that's a potential headwind for sure. And then a bigger headwind, in my opinion, is if the stock market has finished an ABC structure for a 4th wave to the upside in the S&P, and it turns into a route to the downside, we could see more margin call. There's, these last few up days in the market have sucked in a bunch of people again. I think there was the largest 3-day rally ever in all of history, percentage-wise or something, during this 3-wave ABC to the upside in the S&P that we've seen since that March low that was around, I think, March 23rd, something like that. And so I think a lot of people have been buying here, and it's highly possible the market will crush them with a move to the downside. There will be more margin calls. To be completely honest, I don't see how the market could rally on from here, the regular stock market, when most of the economy and small businesses are shut down. Sorry. I know that's a fundamental concept, but as far as I can tell, the only reason that anyone can give that the market should maybe continue higher would be to not fight the Fed. That appears to me about the only thing that the person could throw out there. There's the carnage on the economy and earnings. I think I don't think it was baked in at the low back in March. I don't think it was baked in even then. So anyway, so you'll notice on silver, I was thinking we got a 5-wave structure. I think there's a 1 and 2 way down low down in here. Didn't even bother putting them on this daily chart because you can't hardly see them. But I think we have a 5-wave up structure from a very large cycle trough in silver, complete 1, 2, 3, 4, and I was looking for wave 5 to hit 1601, and the top tick was 1593. So very, very close enough to call that the end of a 5-wave structure. So now it's time, I think, for a wave 2 pullback. On silver, I would look for a pullback back to the wave 4 of 1 lesser degree, but could it be deeper? Yes, it could. And in this environment where a lot of mines are closed, yeah, maybe. So the fact that silver virtually hit my target, gold did hit my target, and completed a 5-wave up structure. It just didn't seem like the miners were probably going to be able to stay up. And even if they do make a move up to high enough tomorrow, I don't think there's much upward movement left in the tank on that move. So I'm looking for this dip. And then, we're coming into the final do or die moment on the bullish count for gold miner and the silvers, or the super bearish count of Elliott Wave International on the gold, silver, and the miners, and we're going to be hitting that in the second half of this month. It's kind of the moment of truth. Hopefully that covered. Let's see. I had one guy asking me about AG count. And AG's got a lot of mines closed, and on virtually everything, I'm looking for the miners to take a move to the downside into the latter half of April before they can mount a rally. So I think I've covered that. What else? How about oil? Are we done with gold, silver, and miners? Everyone get their questions answered there. Let me go to oil. Boy, nat gas had a big day today. Really big day to the upside. It's possible nat gas has bottomed. Does anybody know why there was such a big up day in nat gas today? Does anyone have any sort of idea of? Was there some sort of news that they would attribute to this? It still hasn't broken above. This has been a real choppy move to the downside so far. Hurst still thinks that the nest is due April 24th, so I'm going to reserve judgment on nat gas as far as calling a bottom. But on oil, I showed you this last week. when I held the weekend webinar, this is basically, that is all you could see. That's all you could see. You could see that the Friday candle closed at its high right here. And I was saying that I thought that that was the end of wave 4 as a flat. Okay. A, B, 1, 2, 3, 4, 5 for C for, so that's a 3-wave wave A, and this was the real telltale moment. A, B, C. That's a 3-wave move down to a slight new low, and so then we would get a 5-wave move up, and that would be a flat. And now I think crude oil is probably in its 5th wave down. Looking at a potential target down here, $14, based on looking for a 5th wave in blue. So there's 1, 2, 3, 4, 5. 5th wave in blue that is a very normal 0.618 times the net travel to 1 through 3. So this roadmap is working out really well. I'm still bearish. Let's see what the algo is saying. It's currently flat. It would need a crossover of the Walter Bresser dense moving average in order to give a sell signal. But you can see that the color of the adaptive moving average is still dark red, and therefore it will only consider sell signals. You know, if it were green, bright green like this, it would only consider buy signals, but it is still dark red. So we'll see. We don't have a sell signal on crude oil yet on the algo. What else? What else, guys? Does anybody in the room, if no one has any more questions, does anybody in the room have any loved ones or friends or anything? They know anybody that's come down with this COVID thing? Anybody? I don't know anybody that's been sick. I don't. Maybe all of us live in remote areas and we're traders, and so we're just a bunch of, you know, loners, and don't get around people too much. And maybe, but so far, no one. Jacob says, seems like, Jacob, don't you live in a big city? Seems like you do. LA, yeah. Well, California shut down really fast. Very, you know, pretty smart. John Federico said, did you say you are short miners? No. No, I absolutely am not interested in shorting the miners, even though I think they're going to take a dip here. I want to buy them. And but that I think that's coming in the second half of this month. Yeah. Now, what I am short, what I did early this morning is I bought shares of SPXU, I think it is. Let me make sure. And that's the only position I've got on right now. And here was my thinking. Oh, let's see. For GDX, do you think the dip is immediate since gold started to sell off? Yeah, boy. If my wave count is correct, it might need to maybe move up tomorrow and get. I'll describe that once again here in a second. But no, the one I bought shares of SPXU today, pretty much right after the open, and then let's see, and just as a reminder on GDX, here's the confusion on GDX. Okay, I've had this count of a leading contracting diagonal to the upside on GDX. I've had that count for a while, and you know it's gone pretty well. but it looks weak right here. And yeah, with gold hitting my target, top target for the end of a fifth wave up, and silver hitting my target for the end of the fifth wave up, I just didn't know if GDX could make it on up higher than 27.21 or not. And so I closed out my positions on, I had some Wheaton and some ELYGF, Eli royalty company. I had some sand, and I got rid of those early this morning in profit. And because I just I wasn't sure if it could make it on up. And then I also would see, I could see on on Barrick Gold, that it completed what could be considered, I'm going to turn this into a 240-minute chart, a completed, diagonal, contracting diagonal, 1, 2, 3, 4, 5, and the fifth wave even finishes in ABC. So that looks like that could be done. So I just decided that I wanted to wait for this dip on these. Yeah, it did. GDX did weaken, and the clues were that gold and silver bounced right off of my upper targets. That was another piece of information I was looking at. So I don't know. Maybe tomorrow morning GDX pops up or tomorrow during the day and makes that sneaks up above this 27.21. But I hope it does, because that would give me a completed structure that I could rely on moving forward. But it looks a little weak here. Yeah, I don't know, Greg. See, this here's the big problem I have with the concept of gold as a safe haven. And so, see, I think the reason gold and silver are going to move up is because of inflation caused by the Fed. I just think they're going to print. They're going to push on this string. They're at historic levels beyond belief. And it's, I think, the net result of what they're going to do is we're going to see some inflation. Not to mention, almost all of these commodities I think we've seen a very large cycle trough. Silver, potentially copper. I think oil is getting pretty close. Now that trough may not finish until, May on some items, but I think we're in the neighborhood of a very large cycle trough on commodities. And so I'm going to add a comparison signal of ES-057 on top of GDX. So this is this purple line that I just added onto. Oh man, what'd I do? I didn't take. Hold on. So I'm adding the stock market overlaid on top of GDX here. And you can see the two have been actually moving together. And so if we do get this plunge that I'm expecting down the next leg down in the stock market through early May, we might see the miners just get the baby get thrown out with the bathwater, and we see the miners maybe move down until early May with them. But if my forward roadmaps are going to be correct, at some point, either later this month or early next month, they're going to have to split apart. they're going to have to split apart. But at least this really shows how closely correlated the two have been. So I'm not necessarily looking at gold as a safe haven. I'm looking at it as a potential hedge against inflation as the primary reason why it would go up. Anybody else? Yeah, I don't think the NDX count is of a fourth wave is necessarily holding. I can tell you on Jacob, NDX, the Hurst analysis is pretty much the same. But as you can see, it has moved up too high. It's moved past black foreign validation. Now, I did give this idea here of a potential leading, expanding diagonal to the downside, and that way the NASDAQ could move down, and I showed that last week. The NASDAQ could move down now aggressively in a fifth wave of a expanding diagonal, and that would be 1, 2, 3, 4, 5, and that would be a megaphone pattern, and we would get quite a plunge here. So that, I think, would be my main count right now, is that we're possibly getting, just got started today in an aggressive plunge. That means that each leg here would have had to have been an ABC, and I'll have to look at it and see if that's possible. Then the other possibility is that this was a wave 1. This is, I think, Elliott Wave International's count now, and that this was a 2. See, the problem with trying to get bullish here is, even though it crossed over, and so we have an overlap into the price territory of wave 1. The big problem there, it isn't because the coronavirus this or this, or the business shutdowns. All of that is just talk. What it really is about is Hurst, and Hurst is bearish, still continuing to be bearish down into at least an 18-month cycle trough, and probably a 4.5 or a year or a 9-year cycle trough due in late July. And that nothing has changed that. And that's why I just don't think it's time to be bullish. Yes, it would potentially be huge. Sure would. Now, if, well, ultimately, oh, sorry, there needs to be a 2 there. I did notice that today, the reversal that we saw today was pretty universal. It showed in semiconductors, tech, everything. So I didn't notice any particular single sector that didn't reverse the downside. That's one of the major things I look at. Did anybody notice anything today that might have gone up after the open and closed higher? If there is, I don't know what it would be. I was looking around quite a bit today for some kind of clue of something that might be holding up, but I didn't see it. What else, guys? I hope everyone is staying healthy, and it was very good news when I asked if anybody had any loved ones that had come down with this thing. I'm so glad to hear that no one in the room has. And so maybe, maybe this thing, we can stop it just by staying in, I guess. As traders, that's kind of what we want to do anyway. So that's it for tonight. Thanks a lot for joining. If you have any questions about the algos, the premium plan, or anything else, as a subscriber, you can email me. See you soon. Talk later. Bye-bye.